Hey everyone, this is Jay, also known as Jaynemesis over on eToro, where I trade as a popular investor. This is the Q2 2024 quarterly update, performance update. This is actually a re-recording. I recorded this once already and unfortunately did not show the slides very well for a good portion of the presentation, so I'm re-recording it now, which is a couple of days later. To upload to YouTube. That means that hopefully I will be able to edit the Q&A session, which was fine, across onto this same video, but it may be posted as a separate video depending on if I'm able to do that or not. So you'll hopefully be able to tell when you get towards the end of the presentation if I feel I was successful at that or not, but if not, then the Q&A will be uploaded separately on the YouTube channel. So please keep that in mind. Before we go into the full presentation, the usual disclaimers apply. None of this constitutes financial advice. This is for information and entertainment purposes only. The views that I am sharing in this presentation are my own. They do not represent the views of eToro or anyone else. Please make sure that you do your own due diligence and research, conduct your own research before making investments of any kind, and understand that all investing comes with risk. Your capital will be at risk if you're investing on eToro. That covers it for the disclaimers. Let's jump into getting things started. Okay, so the way this usually works, as I'm sure many of you are aware by now who've attended lots of these, I'll go through a brief introduction about myself and my strategy, how I invest, and the kind of outlook that I have more broadly. Following that, we'll talk about the markets and my performance, where I was positioned going into the quarter, etc. After that, we'll talk about the market performance overall and highlights for my portfolio. Following that, we'll talk about the future outlook. So I'll cover what I said in the previous quarterly report and provide some updated outlook as well. And then at the end, there will be a Q&A. So to kick things off, my name is Jay, as I said earlier. I've been investing on eToro now for over 10 years, so a pretty good track record on there of my performance during that time. In total, I have over 13 years experience now in investing, so I spent a few years investing before joining eToro. I started out as a self-taught investor. From a very young age, I was really interested in investing, economics, business generally, technology, and all of those sorts of things that kind of lend themselves quite well to being an investor. And so I kind of followed that passion and eventually was able to make it my full-time job. My CAGR since joining eToro is over 31% as of the end of June, which is when all of the data in this presentation is from. I have a broad outlook that is focused on really disruptive technologies, but into that I also have quite serious considerations around the ethics of our investment portfolio, the vision for the future, and companies that are impacting the world in a positive manner or a negative manner. So all of those themes tend to play a role in my investing. But overall, I would say that I'm a growth investor focused on disruptive technologies and innovation. My background before I became an investor is that I worked in gaming and events. So I was a professional gamer for several years. Following that, I moved into working in gaming events and then esports and esports management. So yeah, quite a varied career. Eventually, I quit that in 2017 to become a popular investor full time. I've been a popular investor, part of the popular investor program since 2016. So approaching 10 full years of a record on the popular investor program. Although I've already surpassed 10 years on eToro itself, as mentioned earlier. A few metrics for you. So as mentioned earlier, the CAGR, or total annualized return for the portfolio since joining eToro, is 31.11% as of the end of June. My assets under copy, so the amount of money that is following my trades and copying all of my trades, is in excess of $60 million. I have over 13,500 copiers who are following everything that I'm doing, and my lifetime return since joining eToro is 1,618%, give or take give or take 0.3. So yeah, that's pretty healthy metrics for 10 years, but something that I definitely plan on continuing to improve on. A bit more about my strategy and my approach. First things first, generally I try to identify major themes and trends. These are the things that really are the theses behind the majority of the positions in my portfolio. So, for example, that can be something like climate change or electrification, which I'm sure you'll hear a bit more about later on in the presentation. It can be AI. The growth of electric vehicles was a big theme in my portfolio several years ago. So there's all sorts of things that can kind of find their way into being a primary future trend. Some of those could take 2 years to play out, some of them can take 5 years, and some can take 10 years. So sometimes these themes stay in the portfolio for a very long time. Following that, I tend to focus quite heavily on investigating the products and services offered by companies that are relevant to that future trend. So this can involve everything from looking through costs and the actual product manuals and installation manuals and things like that for the different products and services available, as well as trying them out, going and visiting showrooms if it's a car dealership, all sorts of things like that. I like to try and make sure that I really understand the products very well and speak to people that use the products and services from those businesses. After that, I spend some time looking through the kind of more traditional fundamentals, looking at fundamental analysis. So that would involve looking at the balance sheet and cash flow statement for the company, listening into the earnings calls and reading their income statements. Really looking through all of those kind of things, checking out how much debt the company has got, the burn rate, if there is a burn rate, the kind of projections going forward for their revenue. All of those kind of things fall under fundamental analysis, which is certainly probably one of the longest or largest parts of seeking out an investment, is spending time going through those numbers. After that, I consider ESG metrics. I say ESG very loosely because I don't really use ESG scores per se. I do check them, and they have a very small influence, but actually this is much more about looking into the ethics of the business, the sustainability of the business, both environmentally and in terms of how they treat their staff and workers, how much water they use. All of these kind of things really are an impact on how I'm investing. So I try very hard to avoid companies that do things that are negative for the world and for society. So by default, I exclude any weapons companies, tobacco companies, alcohol companies, yeah, all of those kind of things, gambling. I try to avoid all of those things as much as possible. Following that, the next step is to check how these businesses that have made it this far through the process would fit into the portfolio. So really it's about looking at correlations, checking to see how much correlation there is positively or negatively with other themes in the portfolio and with other companies that are perhaps exposed to the same theme. So sometimes I might invest in a company that's a pure play on a theme. It's only exposed to AI and nothing else, but some companies maybe are exposed to AI and some other things. So then I can kind of use that as a way of hedging slightly whilst keeping exposure to the core theme. Following that, there's sentiment analysis and technical analysis. Both of these are much more minor parts of my process. Sentiment can be everything from looking at articles written about the company, reviews on TripAdvisor or Google, all of that sort of thing, as well as investor sentiment more broadly, listening into the earnings calls. How do the investors feel? Looking at the larger investors in those businesses, their reasons for investing in it, and their reasons for withdrawing if they've done that. And then technical analysis again is really quite a minor part of the process, where I'm looking at the charts and using some of the data available on there to influence when specifically I'm likely to enter or exit a position. So heading into Q2, these were the core 6 themes of the portfolio. These really generally stay pretty similar across the year, because it takes a long time for these large themes to play out. So some of these you'll recognize have been in this list for a very long time now. Some of them I renamed slightly just to try and make it a bit clearer on specifically what it is I'm investing in. So first up, we have AI. Microsoft obviously falls into this category. CrowdStrike, Salesforce. There's a lot of companies that you can put under this banner. Really, this is more focused on the software side overall, although obviously semiconductors have a very big overlap with this, which is the next category. AI is obviously a trend that I think is going to continue for some time. There's a lot of potential still yet to be unlocked. There's also some risks here because I think there are quite a lot of businesses that have spent a lot of money on AI but haven't really necessarily found out a good method of monetizing it. And also, of course, it's an emerging technology, so the landscape is moving very fast. So that's another thing that I obviously have in mind when I'm investing in this sector. Semiconductors is next. They've been a major part of my portfolio ever since I started investing. Nvidia was my second ever investment. When I first started, ARM, who are pictured here as well, was another early investment way back in the 2010s before they went private. And now they're part of the portfolio again. Next up is electrification. This is probably the biggest theme of the portfolio overall. It also ties in with the AI trends. I'll talk a bit more about that later. But this can include everything from electric vehicles to the decarbonization of our energy grids and the addition of interconnectors and things to connect different grids together. Products like we see here, where there's an electrified ferry. I think this is in Australia by ABB. That's what's pictured there, if you're wondering what that was. Electrification of our heating systems, railways, all of those things I think really kind of fit into this section. And ultimately, this is a pretty broad category, but a trend that I think is going to continue over the next 10 to 15 years. So it really is going to be quite a long-term portfolio theme, I think. It's already been part of the portfolio for a good five plus years now. Next up is buildings and infrastructure. So here we have some companies that are in the kind of buildings materials space, like Rockwool, that's been in the portfolio for a couple of years now, and Boise Cascade, which is a lumber company based in the US and Canada. Also in here are companies that are kind of a bit more infrastructure based. So pictured, you can see is some software from Ecolab, which is a water management company. I think water scarcity is something that's going to be increasingly important in the future. Likewise, I think we've seen even very recently with the hurricane in the US and some of the flooding that happened in Europe and in parts of Asia as well, that infrastructure in terms of flood defenses and climate change, making our cities more resilient to climate change, is something that I think is going to be a big trend in the future, and somewhere that I think is a good place to put some bets with our money. Next is software as a service. Sometimes I refer to this as just technology. There's a lot of companies that can fit into this category. You can see here I've included Spotify. They had a really good earnings call in this quarter, so I figured that they deserve to have a bit of the attention on this page. And then last of all, there's the renewables sector, which I had more exposure to at the start of this quarter than I do now. And historically, I used to have a lot more exposure in the portfolio. But over the past year, with interest rates where they are, the sector's not been performing so well. So my exposure is a bit lower at the moment. So going through some performance metrics. So this is for Q2 of 2024, which is the period up until the end of June. So from the end of March, or start of April through until the end of June, so a 3-month period. You can see that I slightly underperformed the S&P 500 and the Nasdaq 100. I underperformed by a bit more, but we are ahead of the European markets and the UK markets and the Russell 2000. I think one of the interesting things here is the ongoing struggle from Europe. They certainly are starting to feel the impact of the lack of cheap energy and fuel from Russia. So I think the German economy, in particular, is looking a little bit weak through Q2 and into Q3, which is where we are now. And then the Russell 2000 is also interesting. Small caps really still suffering from the lack of interest rate cuts, which really affects those smaller businesses a lot more. They tend to be a bit more tight on capital and have a bit more debt. So not fantastic results. I would have preferred to have been in front of the S&P 500, but we did have quite a strong Q1. So overall, I'm not too unhappy with this performance. Let's have a look at the year to date. So you can see when we're looking back over the past 6 months, much more competitive with the S&P 500 and the Nasdaq 100, thanks to the stronger Q1. Russell 2000 turned positive, which highlights just how poor their Q2 was, taking that into the negative by so much. The same is true for the European companies. I think what's also relevant to point out here is that I obviously do have quite a bit of exposure to European companies through some of the investments in my portfolio, which explains why Q1 was stronger for us, because you can see here that Europe was looking a lot stronger when you look at it on a year-to-date perspective compared to just the past 3 months. Finally, there's the trailing 12 months period, obviously with the interest rate hikes that were happening through 2023, especially towards the tail end of the year when inflation was looking quite stubborn and things were looking a bit more dismal. My portfolio did not perform as well as I would have liked it to. I was a bit too slow to transition out of some of the larger positions in my portfolio and to kind of jump on to the AI trend as well. Something to consider here, though, especially when you're looking at the performance of the Nasdaq and the S&P 500 during that period, is that really they have been dominated by the Mag 7 companies, so Facebook or Meta, as they're known now, Amazon, Apple, Google, Microsoft, Nvidia. Those names really have dominated the kind of markets overall and are responsible for a lot of the gains that we saw in those big indices. So although things look like I'm underperforming the market quite substantially, when you take a step back and look more broadly at the overall market and kind of take an average of how companies have been performing, the performance isn't quite so bad. I'm not trying to excuse myself here, obviously, but I do think that there is some risk that perhaps the market is not necessarily measuring too much with investing so heavily in such a small number of companies at the very top that are all ultimately competing with each other. I think it's unlikely that all of them will be successful in the pursuit of AI to the degree that they're all investing. So that's something that that there is to keep in mind. My exposure to those Mag 7 companies is much lower than what you would find in the S&P 500 or the Nasdaq 100. So that does explain part of the reason for the disparity there. Taking a look at highlights for the market overall during the quarter. Rate cuts did not materialize. This obviously is something that I did not predict. If you go back and look at my past couple of earnings calls, I expected that probably Q2 was the point where we would start to see the rate cuts happening, and that did not happen. The picture there shows rate cuts over the past 2 or so years, or interest rates over the past 2 or so years for all the major central banks. The blue one at the top is the US. So you can see how it's been flat for quite a long time there. Obviously, we now know with hindsight that Q3 is actually when the first cuts are happening, and maybe they're going to come at a slightly more accelerated pace. But obviously, in terms of what happened in Q2, that was quite a big thing. Next up were the European elections. Obviously, there was build up to quite a few elections during that period. There was the UK election right at the start of July, which technically isn't Q2, but was certainly impacting markets a bit. Likewise, the French elections were just after that, and the German elections. So yeah, there was quite a lot going on there in terms of uncertainty that can affect policy, especially around things like Ukraine. So yeah, quite a bit of market impact there. Next up is, as mentioned before, earnings season. The Mag 7 really skewed things. They had really strong earnings for Q1, which is what they were reported in Q2, where the rest of the market was not quite so bullish. So actually, that kind of I think made some investors actually a little bit wary. Renewables struggled substantially. There's a picture there of SolarEdge, a company that's been in and out of my portfolio for almost, I mean, it's approaching a decade at this point. They had really poor earnings and gave a warning actually about their future outlook. Since then, they've cut quite a few jobs as well. So really struggling in the residential solar position due to the high interest rates. Enphase also went down quite substantially as a result of that. The Ethereum ETF got approved. I know there's a picture of a Bitcoin there, not Ethereum, but you'll have to just accept it. Yeah, so this was obviously big news in the crypto space. Ethereum was in my portfolio at the very start of Q2, but I closed out that position not too far in, and no longer have any crypto exposure in the portfolio for the time being. I don't see the benefits of it too much really. And then finally, AI driving demand for electricity and specifically renewable energy as well. So there's a picture there of Eaton software, which is some of the software they have for managing data centers. They have quite a lot of data center products and did well that quarter. But this is a trend that I've been watching for a while. It ties in with the electrification trend and with the AI trend, obviously. But broadly speaking, we saw quite a big ramp up in terms of investment from the Mag 7, especially in their data center facilities, and their electrical demand really has done well for electrical companies during the quarter, and I expect to see that trend continue. So checking out some of the positions in the portfolio and how they've done. Really, there are a couple of things to mention here. First of all, the first two sections here, adding to electrical and AI and then cutting losers. Really, this was part of a much broader kind of portfolio shuffle, rebalancing that I did through the quarter and a little bit before the quarter as well. And even now, I think there's still some rebalancing that I've done a bit more recently as well that kind of still ties into the same themes here. So as mentioned before, the prediction that I made that AI would be very beneficial for electrical component companies, manufacturers, has really come to fruition. So I added quite a lot more exposure to those electrical companies, as well as to some AI companies that I was very bullish on. So in terms of the electrical companies, you can see ABB, Prysmian, Schneider Electric, Eaton, Nexans, which is a brand new position that I added. All of those I added to in terms of the electrical industry. And then in AI, CrowdStrike and Zscaler were probably the two biggest that I added to. I made CrowdStrike into the second largest position in my portfolio. It then went on to grow to be the largest in the portfolio for some time. All of this, of course, before what happened in Q3 with the major outage that happened. On the flip side of that, the place that I took the money from for those things really was from some of the companies that had either started to fall off a bit or that I just wanted to take some profits out of. So AMD, Boise Cascade, Salesforce, Ethereum, Nucor, Stoneco, and Southern Copper Corporation. Those really were taking profits from winners, I would say more so, especially the likes of Boise Cascade, which has made over 100% in the past 2 years. Really happy with how they performed, but I wanted to redivert some of those funds towards the themes that I just mentioned. And then there are a few other positions in there, generally smaller positions actually, that did not perform so well, and I decided to take some losses on. So SolarEdge and Enphase would be the two biggest positions and the two biggest losers there. So I cut exposure to those quite early in the quarter when the news about the earnings for that quarter for Q1 were released. And I think it was a difficult decision to make because I am still bullish on that sector long term, but realistically, it's looking like maybe there's still another year or so before we start seeing the residential solar market recover in any meaningful way. Some other big news that happened in the quarter that affected our portfolio was Prysmian acquiring Encore Wire. I had invested in both these companies, so I was very, very happy to see this deal announced. Usually when these deals happen, you see one stock price go up and one go down because the deal is perceived to be good for one company and bad for the other. But in this case, both stocks actually rose by about 10% or so. So it was really, really beneficial for me. I rediverted the funds from Encore Wire, which was a sizable position in my portfolio. I put some of that money into Prysmian and some of that money into Nexans, which was a new position that maintained some exposure to subsea cables and cable manufacturing. Finally, the last thing on this slide is the growth of electrical. I've referred to it numerous times here already, but the companies mentioned below there, you can see, all had really, really strong quarters, especially the likes of Eaton, ABB. Even Prysmian as well had a very strong quarter. So yeah, that's something that I really feel I need to continue to add exposure to, actually, is these trends in electrical. It just appears to me like this theme is likely to continue accelerating for the next few years before it starts leveling out for a more kind of stable 15% or so annualized growth rate for the next 5 to 10 years. But in the short term, they've done very, very well. In some of these cases are well ahead of the NASDAQ and up there competing with some of the biggest gainers for the year. So moving ahead and looking at our outlook. So this is what I provided during the previous quarterly call. You can see that interest rates, the kind of global geopolitical tensions and elections were really the main things that I pointed at for Q2 as kind of key things to monitor. Interest rate cuts did not happen, so obviously that played a pretty big impact on markets. Global tensions actually cooled a little bit during that quarter, although they have kind of since then kind of ramped up again in Q3, which I'm sure I'll talk about in the Q3 report probably. And then the elections, obviously the UK, French and German elections were some of the ones that were really kind of dominating headlines, but then there's also India, which was another really big, important election during that period. So looking ahead now, really taking the theme of what I mentioned before with the elections. Obviously, the US elections are the big ones that everyone's kind of looking at now for the second half of 2024. Those are in November, and then they will be sworn. The president will be sworn in January. We've already seen quite a bit of drama there, actually, in terms of the race and what's going on with Kamala taking Biden's position. Which has really kind of ramped things up. I think that's going to be quite important in terms of potential impact, not so much on markets overall, but certainly on our portfolio because we have a lot more exposure to renewables, and there's a pretty big difference between Trump's policy on renewables and energy infrastructure compared with Kamala's. So electrification, EV growth. This is something that I highlighted, I think, in Q4 and Q1. So we saw quite a big slowdown in EV sales. I expect that to start reversing soon. There are some big tariffs being placed on Chinese companies that are trying to move into the US and European markets in a big way. So perhaps that could kind of stunt things a bit. But broadly speaking, I think the industry has become very competitive, and where for a very long time you were only able to buy SUVs and large, more luxury vehicles. Now we're starting to see some smaller vehicles hit the market, and I think that could give a bit of a second wind to EV sales. Again, that doesn't necessarily mean it's worth investing in, because it's still a very competitive industry. But certainly something that I think is worth looking at and potentially adding some exposure to at some point. Soft landing is, of course, the final thing here. So, back on the interest rate talk again. I thought it was going to be in the kind of early part of the second half of this year, but now I think it's obviously going to be more towards the end of this year and into 2025. The speed at which these rate cuts hit the market, and the kind of the scale of them, especially in the US, but also in Europe, I think is going to be quite important to the impact on some of the more growth orientated positions that we have in the portfolio. Some of the companies that are a bit more capital intensive, some of the infrastructure companies, for example, could be impacted by this quite a bit as well. That's all for this part of the presentation. I will hopefully be able to edit the Q&A session that I did on the original live stream into this video. But if not, then please check through my YouTube channel and you should be able to find it there. I'm going to pass it back over to myself, and yeah, thanks for watching this section of the video.